Right now, nothing has changed. So I will remain a bull here in the market. And I will continue to advocate for buying the dips in this market and everything else. Dips in precious metals, dips in cryptocurrencies, dips in crude oil, obviously. Yeah, I mean, you can go on and on. We're going to continue that strategy at the same time, betting against the debt, becoming our own central banks, realizing the debt hyperbubble is going to burst. And we don't even think about when. We don't care when. We know what's going to happen. All we are doing is getting ourselves in the right spots now. In the event of a market meltdown, if you are hedged, like I've been telling you, you're sitting pretty anyway. So why would you care?
Hello, my friends, and welcome to the Capital Allocation channel. So today I want to give you an overview of dividend-paying Russian stocks that I've been looking at recently, give you a technical and a fundamental analysis here. But before I do, I always like to consider the currency risk and the exchange ratio between the currency in which the stocks I'm looking at are denominated and my local currency, which is obviously, in this case, US dollars. So the USD has been losing strength against the Russian ruble over the last year. Here in March, it took about 80 rubles to make $1. Here, the relative strength has been decreasing, and now it's just below 75 rubles for $1. So if this trend continues, it could make buying Russian stocks, in this case, even more lucrative. So the first company I want to look at is Lukoil here. So Lukoil has over an 8% dividend. This thing is in an uptrend, although the momentum is slowing here, and it looks like we could be putting in a head and shoulders potentially. But looking at the fundamentals, if this went down even more, this is something personally I would consider, I would not mind picking up more of at a lower price. So the PE ratio is 8 here, price to book below 1, 0.82. The current ratio 1.44, so that is good. A little bit low return on equity here. Although these, in the Russian companies are essentially basically state-backed monopolies. I mean, they have a really strong position in Russia. They're not going anywhere, and they're continuing to produce this income for the owners. And with a very capital intensive company like a gas company here, an energy company, a total debt to equity of 16% is something you don't see here in the US. So this is a very strong company, 8% dividend, less than 1 price to book. So this appears to me to be a good value. The next one I want to look at is Gazprom. So this is the largest gas company in the world. Many countries are dependent on the gas that this company produces, and there are pipelines being built to China that are also gaining market share. So this is a really strong company here. 3.7% dividend, so not the highest dividend, but still reasonable. Here we're in a clear uptrend. There has been a recent pullback, but the uptrend is still intact. So if anything, this looks like it could be a potential buying opportunity. Obviously, none of this is investment advice. I'm just looking at these, sharing my opinion, and obviously never make a trade based on anything I'm saying in these videos. Always do your own research, always know what you're doing, and consider talking to a professional financial advisor. So Gazprom, here we're at a PE of 4, price to book at 0.36. This is basically unheard of. Current ratio 1.44. Again, a little bit low return on equity, but this thing is basically a monopoly company, or an oligopoly rather. So this is going to continue pumping out cash for its investors, and still a very reasonable debt to equity for a capital intensive company like this. All right, Nornickel. almost 0.3% dividend here. So very high dividend. We are in a downtrend, so this is something that there could be a better buying opportunity in the future. If you look, not only are we in a downtrend, but we're here at a resistance level. We have what looks like we could be getting a crossover on the MACD, and we could be putting in a swing high here. So until I see clear confirmation of a reversal, this is something I would personally prefer to wait for this pattern to reverse. So PE of 6.48. Here the price to book is very high though. Current ratio 1.58, so that's good. But look at the return on equity here, 91%. And pretty high debt. So just personally, with this high price to book, high debt, the other companies seem to be a better value. However, this does have a very high dividend, and some of these minerals that it's pulling out of the ground here could be potentially an inflation hedge, and nickel could potentially be used more for different types of renewables, that type of thing. So that's one to watch. So Novolipetsk steel. Sorry, I probably butchered that, but one of the largest steel companies in Russia here. 19% dividend. Also in a downtrend. Also looking like we could be putting in a swing high here, so this pattern potentially could be waiting. You could wait for a confirmation towards the upside. So let's look at the fundamentals here. A PE of 4, price to book of 3.58, current ratio of 1.56, decent return on equity here, and reasonable debt. So Novatek, another natural gas producer here. So it's the 7th largest publicly traded gas company globally. Reasonable dividend here, not as high as some of the others, but very sustainable. Again, uptrend here. We've pulled back a little bit, but we haven't broken down, so we're still in an uptrend. This could be a buying opportunity. This is just something that would have to be monitored, and obviously it's a personal decision whether you feel comfortable taking an entry in any position. But we have had some support here. So as for the fundamentals, PE of 31, price to book 2.34, current ratio 2.4. Again, a little bit low return on equity, but very low debt here. So not quite as much of a value as the others, but still reasonable. Rosneft, another oil company here, 3.59% dividend. This one, the technicals, it's a little difficult to see. At least on this chart, the history is not there. But looks like, again, slowing momentum. Could be at a swing high here. But it's one to definitely watch. All right, MBT. So it's the largest mobile network operator in Russia. Very high dividend, 12.79%. Here we've had a pullback recently. So it was chopping around in this range here. So I wouldn't be surprised to see this come up and kind of test this area. And it does look like we've really put in a lot of support. So this is the key area to watch here, around 7.5. And up in this area, somewhere between 850, to see which way this thing wants to go. So for the fundamentals, PE of 8 here, price to book of 20, so this is very high. Current ratio less than 1, so that's not too good. But look at this return on equity. That is crazy here, and a crazy amount of debt. So 20 times the debt to equity here. So again, this thing has a huge dividend, but a lot of debt. Surely this is a monopoly. It's the largest cell phone operator in Russia. So it could be something to buy just for the dividend, but given that high debt weighing it down, it's not for me. Tatneft. So this is the 5th largest oil company in Russia. I think you can see a theme of what a lot of these are in Russia here. A lot of their companies, resource-based companies. So reasonable dividend, 3.59. Looks like we have some support here. Just chopping around in this range though. So I think this could be something that would require a little patience. This thing, I could easily see this thing breaking down. We're going to have resistance here around 40. So yeah, this is one to watch. Could get a better entry with this one. But as for the fundamentals, PE of 6.43, price to book of 1.4, so that's pretty good. Current ratio a little low, decent return on equity, and very low debt. So I like to see these companies, capital intensive companies with really low debt, low PE, and fairly decent dividend. So that's one to watch. So Sberbank, so state-owned Russian bank. There's a lot of news coming out with Russian CBDCs, all this type of thing. This is basically a monopoly here. It's pretty crazy. We had a pullback recently, but we're still in an uptrend, so this could potentially be a buying opportunity. As for the PE, 5.68, price to book 1.24, so that's good. Very low current ratio, decent return on equity, and decent total debt there, 75%. And this thing has a 6.3% dividend, so that is pretty good. So yeah, hopefully this gives you an overview. You can look more into these specific companies, try to find one that you like, do a little more background research. So just a quick overview, guys. If this was useful, please give me a like, consider subscribing. Take care, everyone, and I will see you in the next one.